Welcome to the Great Reset Opportunity Report. I'm Chris Blasi. I'm really pleased to have David Morgan as our guest today. David is a very well-known analyst and speaker on all matters macroeconomic and geopolitical. Many of you may know David from his excellent newsletter, The Morgan Report, which he is the founder and publisher of. David can best be described as a big picture economist who is really focused on helping educate people to help them understand honest money, macroeconomics, and how the global financial system works. So I'm really pleased to have him on. David, welcome to the show.
Well, Chris, thanks for inviting me. It's a pleasure to be with you. It's a first, and I appreciate it very much.
Yeah, we're really happy to have you on. This is a real treat for our viewers and listeners. As the show is titled, The Great Reset Report, what that infers is that we believe that there is always change going on. I mean, nothing is static. Things are always evolving. But Great Reset means the changes that are coming or imminent are going to be of a much greater magnitude than what we're used to. I mean, that's our premise here. Now, everyone has a different definition of what the Great Reset or economic reset or financial reset is going to be. Some people will even argue that there isn't going to be one. Others will argue that there will be one. And so others will argue that there is one and it's currently underway. So we'd like to start the show by getting our guests' opinion, get a level set of where they're coming from. What is your opinion as far as, is there going to be a Great Reset, and what will its scope and magnitude be from your analysis?
Tough question. I'd probably fall into the latter category that you outlined. I would argue pretty strongly that it's already started in the 2008 financial crisis. I mean, even the mainstream financial press calls it a financial crisis. And, people say, well, it's over. It isn't. But let me just build on the foundation a little bit. When that happened in 2008, we were much closer to a real collapse than most people really understand. And if the intervention of the Federal Reserve didn't come in and start buying absolute garbage loans, basically subprime mortgages that were marked as A quality or AAA quality that were probably C quality, and rescue all of these entities that had produced these products and packaged them as securitized debt instruments of high quality. If that hadn't been swapped out, so in other words, taking dross for gold as a metaphor, taking this lousy paper and replacing it with T-bills or T-bonds or T-notes, the whole system probably would have seized up. It's not that the ATMs would have closed. It's that banks wouldn't trade with each other. I mean, the word bank is a metaphor for controlling the flow of a river. And if there's no flow, nothing happens. And we were very close to that. So that's number one. I think it started in 2008. Luckily, I would say, the flow continued. And this is by, swapping out good for bad. And the system continues to build debt after debt. And so now we're in a system where maybe from a cursory outlook from, let's say, the average person that still had a job or still has the same job and is making their mortgage payments and everything else, really, it's behind us. Nothing really took place. It was scary, but it's over. Well, the truth of the matter is that unless you solve the main problem, you haven't really done anything. So all we've done is what Jim Sinclair has said, extend and pretend. We've extended the problem another 10 years, basically, and we've pretended that everything is okay when in reality it's not. So as this continues, or the last part of this reset takes place, you're going to see the US dollar start to lose. Well, first, I believe it'll gain strength, as it has been doing here the last few months, because it's the most coveted and respected among basically the people now, not so much the nation states. I mean, if you look at, what China is doing with the US dollar and Russia and even some of the Europeans, they're not as willing to buy US debt as they were in the past. However, if the man on the street, you go to, Venezuela or Argentina or Iran or any of these places that are having a currency crisis, the black market's all about physical US dollar bills or $10 bills or $20 bills. So the point is, that the U.S. still has a positive interest rate, which is kind of a sucker's game to get people that are going to get a negative interest rate in like the euros to put their money in the U.S. treasuries. But that's starting to unwind. And once it does, there'll be a run to the dollar and at the same time, more of a run to gold. So I think once the repatriation of the dollar, which is a fancy term for people that own dollars overseas, realizing that we, the United States, has basically exported our inflation all around the world, starts to say, I'd rather have something of substance than this piece of paper, starts moving the paper back into the U.S. and buying up, General Motors and, whatever. I mean, buy up whatever they can, real estate, stocks, and then once that momentum starts, then you'll see the run to gold. So what I expect to see is the dollar strength and gold strength, and then there'll be a place where there'll be a parting of the waves, meaning gold will continue to go up in dollar terms, and the dollar will start to decline relative to the dollar index.
So I know you're passionate about developing wealth preservation strategies, right, in times of change like this. So without revealing too much about what you provide your subscribers and all that, can you give us a little overview on what your strategy is? I know the precious metals play an important part of it. And also, do you see any real changes to the central banking system or the Fed in the next downturn? And I agree with you, the financial crisis started in 2008, it's just been delayed. And the feeling is that that's going to accelerate again and probably be much larger and get out of control. And do you think there'll be any change to the central banking system? Your thoughts on that?
Yeah. Well, first part is our basic strategy is and this is for free for everyone, and that is to have an exposure to physical metal first. And I'm not a bullion dealer. I know many of them in the industry. But if all you do is get 5 to 10% in physical metal of your net worth or your free cash and sit on it and don't worry about it, you're much better off than anyone else that doesn't have that. If you want to go to the next level, then you can go into what we do, which is primarily increase the risk to reward profile, which is through top tier cash rich unhedged mining companies throughout the spectrum, meaning not only gold and silver companies, but we've been on the rare earth elements, the lithium, the energy metals, base metals. We were first on the zinc story and that type of thing. But you get leverage there, but you also have more risk. So that's what we provide. And then I do trade, but I'm a position trader. Very seldom do I put on a trade, maybe 3 or 4 a year. But I show you exactly how I enter the market and how I exit the market. I was lucky or skillful, caught the $19 breakout. On silver, it was a very large channel formation. It broke to the upside, which means you have to go long. Stayed with that trade to 26. And at 26, I exited. Excuse me. And then QE2 was announced. And once that happened, I jumped right back in at 26 and rode it all the way up to 48. So that $19 to $48 move was enough to get a lot of people to stop the Morgan Report subscription because they were done. Now, I want to be very clear that I don't advocate, excuse me, Chris, I'm sorry. Okay. I do not advocate leverage in most cases. I just did on that particular case and it worked out, but a lot of people get in trouble. Most people have no business whatsoever all being in the futures market or even the options market. But, I do it and I teach it. And so that's the basis. Now, your biggest question, which is far more important, is do I think something will fundamentally change at the central bank level? And let me preface it with this, and that is the late, great Michael Rupert said, unless we change the way money works, we haven't changed anything. And this is really one of my most heart and I guess gut felt statements, because we could have a situation where the reset happens and no one knows exactly how, but let's just take the proposal that there's a new currency that's globally accepted, and that's the reset. And if you could control the cognitive map, if you can get everybody, for the most part, except a few exceptions, thinking that everything's changed and everything is good and we're back on and maybe tied to gold and whatever, but in reality, you haven't changed the way it works. And the powers that be, the central banks, are still in charge. you really haven't changed anything. So my greatest wish is that it does change at the fundamental level, and the central banks basically are eliminated, and that we have a money of the people, for the people, and by the people of the planet. That's what I'd like to see. Now, that's highly idealistic, almost impossible to conceive it could take place. A lot of the cryptocurrency fans will advocate that that has taken place, or the ability to do so has taken place. I'm not so sure. And I don't know if we want to dive down that rabbit hole, but that's my greatest fear, Chris, is that there is a reset and everything looks good, but it's another con game and it just starts up all over again. The powers that be remain the powers that be. They might have changed their names. They might have ducked out behind the scenes. They might have obfuscated where they really are, but nonetheless, the control remains with them. And that's my biggest fear.
That's the most likely scenario. You know, I share with you, we'd love the most idealistic scenario, but you got to be practical. And yeah, I'd like to come to cryptocurrencies in a couple minutes. Just one thing, you know, wealth preservation usually means, you know, you're putting your assets into something and you're not supposed to be too focused on the price, especially in the short to intermediate term. But the nature of anyone who's investing is they're still following the price. So these are the questions we're always getting from people. This is what they're very interested in. You know, for gold and silver, 2018 has basically been trading in a narrow range, you know. And do you see in 2019, and not, you know, to put you on the spot, but this is what people want to hear, what is your analysis showing you? Do you believe 2019 will be a breakout year, either to the upside or the down for gold and silver? Or do you just see this continuation of, you know, sideways trading?
But I really wish I knew, and I probably sound like a broken record, because, you know, I'm not afraid to say when I'm wrong. And if you go back to 2016, I called the bottom in 2015 after about 3 attempts. I got it correct. And that still is the bottom on this intermediate term cycle, but we're getting close to testing it in silver. We're still above that low, and gold is pretty well above that low. But every year, I think for the last 2 years, I said I thought that the following year would be better. So was 2017 better than 2016? No. And I thought 2018 would be better than 2017, and really it hasn't. So where are we in 2019? The honest answer is I don't know. What I think, based on how far we've gone, this is pretend and extend, and what's going on with these, you know, trade wars, currency wars, the backing away from the U.S. dollar, the Treasury having to basically be the bank of last resort to buy up the debt instruments of the United States to fund the money supply. Most people being more awake and aware about the financial system. I really think that 2019 will be a year that we start to get more buying into the sector again. And that's what it takes. It takes more buying pressure than selling pressure. Now that a lot of the heat's come off cryptocurrencies, some of those people that moved out of the silver market, primarily some gold, but primarily silver market, might rethink their position and start to move back into the silver market. And if cryptocurrencies go up or down, I think regardless, I think there'll be more money coming back into the precious metals, because cryptos, like anything, are a market, and all markets go up and down.
So as far as precious metals, you know, we see it as a bigger market. A lot of people just focus on gold and silver, but there is platinum and palladium. And while gold and silver have been basically trading sideways for a period of time, not so much for palladium. So, you know, we believe that diversification should also take place within an asset class, not just among having multiple asset classes, and that with a logically weighted position in all 4 precious metals, there's a value in that for investors. So I'd like to get your opinion on, you know, the other metals, the palladium and platinum. Do you think they should be part of a portfolio of precious metals? And can you share a little bit of why you think palladium is so outperforming the other metals? And again, we believe in diversification because you never know when the metals are going to hit their stride, right? There was an expectation that probably gold and silver should have done better in 2018 than they did, but very few people, you know, I know that you've been an advocate of palladium and have done quite well as a palladium investor, so you understand it. So share with our investors your thought, or our listeners, your thoughts on diversification within the precious metals and what's going on with platinum and palladium.
Yeah, so my take on it, Chris, is for the average person out there that's just, able to save a modest amount per month, maybe $100 or something. I think probably for them, just sticking to silver and gold is probably the best. However, if you're like a member of the Morgan Report, I'm all over the Palladium story. And we got all our members in if they followed, my recommendation. We got it somewhere around $600-700 level. I did advocate getting out around over the $1,000 mark. And obviously, speaking to you today, probably got out too early. But I really like the Palladium story. And this is one I like to tell because I used to trade a lot more than I do now. And I traded the other whites a lot. I traded platinum, palladium a lot. The very thin markets, they move a lot. Most people don't even bother with them. But I actually had some contracts on during the Great Palladium move. And the Great Palladium move was sometimes, I should know the year, but I don't. You look it up on a chart. It was early 2000s. And what had happened was that Ford Motor Company all auto manufacturers use PGMs, platinum group metals, in their catalytic converters. And what had taken place was platinum was far higher than palladium at that time. And Ford made a business decision that they were going to remove platinum from their catalytic converters and replace it with palladium and save money. Because at that time, again, platinum was far higher in price than palladium was. So the logistics department of Ford Motor Company, not knowing much about the metals markets, retooled and phoned up, their local friendly metals dealer and said, we want to buy this much palladium. So the market took off. And I got a phone call from my broker saying you had to add margin. And I said, I'm long. I want to add a contract or two. I've got all this equity. No, the margin rules have changed. If you're long or short, it doesn't matter. You've got to add X amount to your account to keep your position. Well, basically, palladium went from in the hundreds of dollars up to about $1,100. And as it went up, it kept increasing the margin requirements. Believe it or not, at the top of the palladium spike, in order to hold a futures position, you had to put into your account twice the cash cost of the palladium. So palladium is $100 or 100 ounces and 1,000, so $111,000 per contract. If you wanted one contract, you have to put back $222,000 to hold that paper contract. So what it illustrates is that the physical market can take control of the paper market. And this is absolutely what happened to the palladium market. Unfortunately, from my perspective, when that reached the top, the LME at the time basically took control of the physical market that was at their disposal. In other words, what was in their domain, and set the rules as far as who got the least what, when, where, and why. Everything did settle down. There was enough physical over time to take care of the situation. But again, I like to give that illustration because, one, it shows you not only how thin the market is, how much the palladium story is not understood, but how the physical market really does have the upper hand at times. And I think this is something that will take place in the future for the metals in general, because when the run to gold starts, there'll be a lot of not only banks running to more gold, but brokerage houses, individuals, wealth funds, sovereigns funds, family offices, you name it. Everybody's brother's uncle is going to be out there seeking gold, and that will spill over into the silver market because the silver market is so tiny in comparison to the gold market. This is what will take silver multiples higher than gold, in my view, because if gold has X amount of money going into it, and silver even has 1/10 that amount, the amount of silver on a dollar basis is so tiny that it'll push the price far, far higher.
Yeah, and that's been an expectation for a number of years, but I think it's not too far down the road. So we're going to jump over to cryptocurrencies again. You brought them up. In the past, you've been a little critical of Bitcoin, and I would agree it was a very healthy skepticism, and I think you were proved right. And I think people conflate, cryptocurrencies with blockchain, right? They think that they're one and the same, and they're really not. Right. But let's talk about cryptocurrency. Do you see, what is your opinion on cryptocurrency as an investment for individuals? And do you see cryptocurrencies being issued by central banks in the future? That they'll be controlling the digital currency market. So where do you stand in that area?
Well, on the individual basis, I would say, it's not my right to tell anybody whether or not they should, like or dislike cryptocurrencies. Personally, at my level, I don't feel that the cryptocurrencies are providing anything other than the idea of an alternative currency, which I'm all for. I am all for a alternative currency to the current system that's run by the globalists, basically. However,
I just have to say, I think it's like before we talked about what ideally we'd like to see with the central banks. I think in theory, we'd all like a true free currency. And I think there's more hope or wishful thinking regarding cryptocurrencies than what they're actually able to deliver. But
absolutely. And if you look at the truth, what's the difference between a central banker issuing something of no substance and have a monopoly on it than Mr. XYZ coming up with a cryptocurrency that has no backing whatsoever at all and saying it's better? It's the same thing. It's just issued by a different party. Does that make it better or worse than something issued by the United States Federal Reserve? I don't know. It's up to you to decide that. So I like the idea of a competing currency, but they aren't really a currency. They're just, pieces of paper in theory. I mean, they're digits in your computer or on your phone, and you can swap them back and forth. So the whole idea of what they have done doesn't really jive with the honest money movement, which is, you even don't hear those terms anymore. Now, Bitcoin will argue that they have a limited supply, and there's something to that. But as far as I've looked into it, I'm still a little leery of it due to the fact that InQtel, basically the funding arm of the CIA, was involved. There's a white paper that came out before 2009 about doing some type of digital currency. So I'm a little skeptical. Now, as far as blockchain goes, I think the next iteration up could be using the blockchain with asset-backed, we'll call them cryptos, or asset-backed blockchains through the distributed ledger, where you could blockchain, tea, coffee, lumber, gold, silver, that type of thing. I think that may be the next wave up. I think the idea is sound, and I like the idea of absolute freedom and anonymity, but there really isn't that anonymity that's, from my study anyway, what's purported to be that, I'm sure there's guys with a VPN and, an anonymous this or that, or that are in the cryptos that basically do have them anonymously, but it's not set up that way. It's set up to know your customer. And, anyone that thinks, they fooled the system, some rare cases probably have, but generally speaking, you're on there. You're on the blockchain. It's known who you are. So I think it's developing. I actually am positive to the concept over the longer term that something will develop where we do have a true competing currency to the system at large. I hope it happens. I hope there's multiples of it, not just one. And I do think, to answer the last part of your question, do I think the banks will get involved in it? And I think yes. They do not want to lose their monopoly, and they're going to put their tentacles out as far as they can to envelope the entire globe on the monetary system. So if the monetary system starts to move in that direction, they're going to continue to try to keep control.
Yeah, I think I agree that the whole idea of the cryptocurrencies are in their infancy. There's a lot of things about the systems that the current systems that people like. Flaws about the current cryptocurrency market. I'll give you a good example. What I believe is, we hear about Bitcoins being stolen from the exchanges. And there's an interesting thing that these are all unique units, but they're untrackable. And the blockchain is supposed to be recording them. But the one benefit of having it recorded, you would think that if someone stole your Bitcoins, you would be able to trace them and get them back. But then they kick in, then they talk about the anonymity, and it's like, well, it's lost. So it's almost like the only benefit of having something completely logged and registered would be retrieval of stolen property, but it doesn't give you that benefit. So again, there's things that people are used to, right? When your credit card gets stolen, you're made whole. I don't know how much people will really embrace something that can be stolen without any recourse of getting it back. I mean, that's going down a rabbit trail a little bit, but it's all part of this is the early stages for cryptocurrencies. blockchain is really just a very sophisticated database system that's going to be deployed in many different ways. And maybe 5 years from now, we're going to see something that's much more functional, stable, and that can be really used in a broader way. But what I want to do now is I'd like to, if you can share with everyone who's listening, how can they learn more about David Morgan and your work, and how they can maybe subscribe to the Morgan Report. So just give us a little bit more about you and where people can learn more about you.
Okay, great. Well, the main website is themorganreport.com, all one word, themorganreport.com. I have a free service, comes out, we publish probably 3-4 times a week. The weekend is a wrap up, and I do what I call the weekly perspective. It's usually about 10 minutes of talk about the global financial markets, which I think is the most important points to make. And I wrap up with a comment on the metals every week. That comes out on the weekend. During the week, sometimes we'll have offers that are either liked or disliked. Other newsletter writers use my list because they know I have a very powerful list. So Agora, Stansberry, Weiss, some of these will put out offers. Some people like them, some people don't. You just ignore them. If you just want the main thrust, it comes out either Friday, Saturday, or Sunday. So that's the free list. For those that really want to get involved, and you talked about wealth preservation, and I thought, when I started the Morgan Report like 20 years ago, my main thrust was wealth preservation. And if my main idea was in the top tier companies, you basically buy and hold them. And if you actually followed our work, you'd be sitting on companies like Royal Gold, Franco-Nevada, Pan American Silver, and all these companies are up like 6, 7, 8, 900% from where we got in. So, for example, if you look at Pan American, when we got in, your dividend on the books, if you check the stock tables right now, it's like 1.2%. But if you bought it when we bought it, it's like an 8% dividend. So, and my idea was correct, mostly. I thought every one of those that I picked you could hold long-term. Turned out not to be the case. I made adjustments. I admitted it. Silver Corp comes to mind. We sold that. Made a great trade on that stock, by the way. We don't want to go too much. So if you're interested in subscription, just use the pull-down menu. It talks about the subscriber services. It's a pretty good sales page, pretty detailed, and there's a video pretty much tells you everything about it. As far as where else for free, I've got a Twitter feed at SilverGuru22. I have a YouTube channel, The Morgan Report. I do the podcast I just mentioned on the weekends. And so there's a lot of information I provide for free. 2 books, or actually 3, Get the Skinny on Silver Investing, The Silver Manifesto, and Second Chance, How to Make Big Profits from the Coming Tsunami in Gold and Silver. So 3 books written, monthly newsletter, lots of interviews, and I guess that'll take care of it.
Well, David, I've always appreciated your work, and I really encourage people, check out David's website, check out what he offers, his books, his newsletter is really informative. And I think with what's unfolding, he's going to be particularly beneficial for an investor. So, David, thanks a lot for coming on the show. I hope we can get together again in the new year. I think things are changing so rapidly that updates with someone like yourself are very useful and helpful to our viewers and listeners. And again, thanks for coming on.
Well, my pleasure. Enjoyed the conversation very much, Chris.
Take care.